Here's a question you probably didn't expect to be presented with when you clicked on this video, and we will answer it. The question goes like this: how did the women's rights movement in the 1960s and 1970s reduce the chance that we're currently in an environment that would cause a housing crash? What's up everyone, Conrad Neufeld here, and today we're answering two very important questions. Is the housing boom over, and is the real estate market about to crash? But let's just jump right into the answers. Is the housing boom over? Probably. Is the housing market about to crash? Really unlikely. But as you may know from some of my previous videos, what am I always saying? It's that context is key. It's not just enough to know what the right answer is. You also have to know why and how we got there. Before we get into that though, if you haven't already heard, I am co-hosting a free down payment contest with the Bald Prairie Real Estate YouTube channel. And this gives you the opportunity to potentially win up to $25,000 towards your down payment. So if that sounds like something you'd be interested in entering, I'm going to put the link to that video in the description below. And as always, if you're new here and haven't subscribed yet, please consider subscribing and hitting the bell notification so you're alerted when new videos come out. Now let's get back to our questions and start with the easiest of the two. Is the housing boom over? And it's the easiest of the two because it's based off hindsight, and I think by a large amount of people mostly expect it. And what I mean by that is that there is enough data looking back at the previous couple months to observe that things have indeed slowed down from their crazy fast pace that the market was moving at over the last year and a half. It doesn't take fortune telling to know that, it's observable data. It's also expected in the sense that the music at the party can't keep playing on forever. This crazy fast pace that the market was growing at eventually had to come to an end. Eventually things had to slow down. Now there are some people who believe that this is a last call for alcohol kind of situation, that the party has been signaled to be over but isn't over quite yet, that there's still a little bit more to go. And truthfully, with September right around the corner and September being typically a pretty busy time for real estate transactions, it is possible that we might see news articles talking about how busy the market is again when September arrives. But this rapid expansion of housing prices, this big housing boom that we've been going through for the last year and a half, that for the most part is over. Now that being said, the boom being over or things slowing down doesn't mean the end of times for the real estate market. It just means that things are going to slow down to a more reasonable pace. And I think we can all agree that's probably a good thing. What a lot of people don't seem to agree on though is why the housing prices are likely going to stay where they're at and not come crashing down. And I think that's mostly because it is very difficult to fully comprehend all of the factors that go into the Canadian housing market. I mean, you've got geographic, demographic, psychographic, and economic factors all in one big melting pot and all have an influence on it. For instance, I had said at the start of my video that the women's rights movement in the 1960s and 1970s and all of the societal changes that came as a result of those movements had a pretty substantial impact on the housing market and housing prices that we see today. What a lot of people my generation and younger don't know, and yes, despite my receding hairline that I've been rocking since birth, I'm only 33, okay, so I'm a millennial. What a lot of millennials and younger don't know is that up until the 1980s, the woman's income wasn't allowed to be used for mortgage qualification purposes, at least in most cases. It was all reliant on the man's income. Back then, jobs that women held weren't seen as reliable or as stable as the man's income. So for the purposes of mortgage qualifications, you just simply couldn't use it. But as we know, that changed. And over time, women began entering the workforce in greater and greater numbers and started asking for things like equal pay or something crazy like that. Weird, right? So over time, what you started seeing was an upward pressure in housing prices. Why? Well, now instead of a single income being used to support the purchases of housing or the mortgage payments that go with them, you now had two incomes, which allowed you to support a much larger mortgage payment, and in turn allowed you to bid up a home that you might have really wanted. And this trend continued for many decades to come, making it gradually harder and harder for single income or lower double income families to qualify for those houses. So when you see someone on Facebook complaining that housing prices have now risen to levels where people can't buy anymore, there's an element of truth to that. Not because, housing prices have risen to the point where people can't buy them anymore, but rather housing prices have started rising to the point where single income families or lower double income families can't purchase them anymore. But of course, we know that there's a lot more going on in this market than just that. Psychologically, this low rate environment also makes it for a time to buy. There's an incredible amount of FOMO out there, that fear of missing out, and people want to lock in these lower interest rates. They want to buy when the interest rates are low. But contrary to what some Canadians believe, these low interest rates are not driving young Canadians to buy houses that they cannot afford. This article on Forbes, for instance, said low mortgage rates allowed young families to buy houses earlier than they otherwise would have. That might be true for America, but that's definitely not true for Canadians. All of our traditional mortgage applications in Canada aren't qualified at the contract rate. They're qualified at the much higher stress test rate. So whether that young Canadian gets a 1% or a 3% interest rate on their mortgage, it doesn't actually impact their pre-qualification. They still can purchase the exact same amount from a qualification standpoint. Now, does that mean that these lower rates have not had an impact on housing prices? No, they definitely have. Lower rates mean less interest you're paying, and as a result, lower mortgage payments. So more families are incentivized to buy, increasing demand, which is what has the upward pressure on price. In other words, increased demand because of the lower rates was the driving factor. Not that these lower rates allowed young Canadians to over-leverage themselves and purchase housing prices that they just simply can't afford. That's not true. Canadians can, by the most part, afford their mortgage payments. Another factor that's had an impact on the prices of houses, and I think in respect to the last 2 years, probably one of the most dominant ones, is the sheer amount of money that has been printed and spent into the Canadian economy by the governments, which means more money chasing fewer homes. And this effect is an effect that not every province felt uniformly. Back in March, I actually made a video regarding this point, so here's a clip of that. If you look at the prairies, for instance, there are very few people worried about a bubble, and here's why. Let's take a look at Calgary, Edmonton, Regina, and Saskatoon. If we use the MLS Home Price Index, which allows us to measure the changes of home prices over time, you can see that there was a run-up of home prices before the 2008 crash, and that some markets were affected sooner than later. What followed in each of those markets, though, was a very flat decade. Now you can see that some markets have increases in home prices in 2021, but nowhere close enough to be concerned about a bubble. And if you throw in Winnipeg for good measure, you can see that maybe they're a bit overpriced, but you're more likely to see flat home prices for a while rather than a significant drop in prices. But let's be serious. When the media is talking about a Canadian housing bubble, they're not really talking about a housing bubble in Canada. What they're really talking about is a housing bubble in the larger cities within Canada. So let's look at the Greater Toronto and Greater Vancouver areas. What you'll quickly see is something else is going on entirely, and it's not just the effects from the pandemic. Home prices have been rapidly increasing in these markets for quite some time, long before COVID was even a thing. And if you take a mean regression based off 2005 to 2015, that's 10 years worth of data, it looks something like this. When you look at that, yeah, home prices look overpriced. But if you look closer, you'll actually notice that there was a shift in the mean regression line, starting near the end of 2015. Something happened that set these markets off on a whole different course, and that something was a fiscally loose government. Now, this is not to get political. It is well known that Justin Trudeau lacks the financial experience that previous governments have had, both conservative and liberal. Money is just not his strong suit. And in this case, his policies and government spending have had some adverse effects on housing prices in certain Canadian markets. If we look at Montreal, for example, you'll see the same thing. Housing prices were rising long before COVID had an impact. The trajectory of housing prices changed after the election. They just continued after COVID. You'll see the same thing in Ottawa as well. So what does this all mean? It means that likely this is not a bubble, and that a majority of these housing price gains are actually based on fundamentals. So basically, housing prices are here to stay. And no, despite what you might be reading in the media, Canadians are not significantly over-leveraged. They can handle their existing mortgage payments. In fact, they've been tested to handle significantly higher mortgage payments. What you might see, depending on the province, is a period of very flat housing prices, but it is very unlikely that you're going to see a significant or meaningful drop in these housing prices.